Was the best day on our share market so far this year. Investors went hard early in the session to push the 200 to its highest point since December the 14th, 2007. The market gaining $33 billion in value as uncertainties tied up with the election were unwound. With the election over, investors were back in focus.
Well, I think you'll find it's a bit of a relief rally. There was a lot of money that was probably sitting on the sidelines expecting a Labor win.
The banks drove the gains, each of the big four up by more than 6%. Analysts say with franking credits intact, self-managed super funds will continue to invest in the sector, while the status quo is good for housing.
No change to legislation on negative gearing is going to be a positive for mortgage growth.
Health insurance stocks like Medibank Private and NIB were big winners too, as Labor's plan to introduce price caps on premiums disappears. But Chinese analysts say the health of Australia's relationship with China may still be fractured following the government's ban on telecommunications giant Huawei. Still, on a global investment scale, ratings agency Fitch has today reaffirmed Australia's AAA credit rating. Along with many investors, small business groups have also welcomed the election result.
It means some certainty for us as we know what the policies are.
The Council of Small Business Organisations of Australia says tax relief is a key component.
The first thing was, of course, the tax cuts, but there was the increase of the instant tax write-off, which is going to go up to $30,000.
The Australian Chamber of Commerce and Industry says there are immediate issues that need to be addressed.
They need simpler and more effective workplace relations, so we make it easier for small business people to hire people and to run their business as well. We want to see power prices come down and we want to keep them down. We want to make sure the power supply is reliable.
The government is planning an overhaul of the vocational education and training system, including incentives to employ 80,000 new apprentices.
If you're on low wages, the best way to get higher wages is to increase your skills. And we also know that people with high skills have better job satisfaction.
Unions fear workers will be left behind.
So the concerns that we have is that there will be a larger attack on working people, more casualised jobs, and we're not going to get wages growth.
Well, as I mentioned there, the growth on the Australian share market on the 200, 1.7%. That's how much it rose. Westpac was a standout. Mortgage brokers also did well. Telstra fell. The election result provided our currency with some support against the US, even as China-US trade tensions persist and talk increases of an imminent official interest rate cut.